Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, April 10th, 2021. And our top story this week, accessible and personalized financial advice and wellness takes center stage. Well, joining me now to discuss this and a lot more is Gary Lineberry. He's a co-founder of FidVisor. Gary, great to see you. Thanks so much for joining us on the program this morning.
Well, thank you, Jeff. Nice to be with you.
Yeah, it's great to talk to you. And look, financial wellness, education, so important, vital for so many Americans to have the basic information. And, you know, there's been a lot of talk amongst, experts about what consumers really are looking for. Are they looking for the robo-advice platform? Are they looking for the one-on-one education? Or are they looking for a hybrid approach? So figured I would ask you that question.
It's a great question. And I think we're all evolving and learning on this as the industry progresses through it. Our view and what we're about is delivering individual, unbiased advice to everyone. And our view is that fundamentally, people want to deal with people. I mean, there are some tremendous merits to robo solutions. You know, they're efficient to deliver, and they are helpful for individuals. But we look at it really in a context. I mean, and the context is, what's the situation we're facing in the United States when we think about households? We have 3 out of 4 households that are not financially healthy. I know that we've all seen the statistics, right? The number of people that can't handle $1,000 emergency, the number of people that are stressed about their finances. And of course, that's grown since COVID. And when we look at the research, what we see is people want help with the objectives that they have in their lives. For example, retirement's one that's clear. It could also be saving outside of retirement, emergency savings. We see, you know, nearly 70% of the people wanting some help with that. What kind of help do they want? They want to be able to talk with someone. So, you know, the way I think of it, Jeff, is, I sometimes think about it in terms of medical information. You know, many of us will go online, we'll read about something that we may be concerned about or what have you. But at the end of the day, we want to talk with a professional about how that information or that issue affects us in our unique way. And that's why we think individuals ultimately want to deal with other people.
Well, Gary, is a great answer. And, you know, Gary, is that personalization, that desire for personalization, is that what is lacking in today's solutions? You know, do customers today, when they're out there, you seem to indicate that, you know, they're looking for someone to sit down with and talk about their situation. And yes, you can learn about someone else's situation, and maybe some of that applies to you. But is what's lacking today that level of personalization and being able to provide that by the advisor or by the robo solution?
You know, Jeff, we think it's a gap. We think it's a gap in what's delivered today. You can think about it and you say, well, what do we think people want? And again, it's our point of view. But we think people want somebody they can deal with. We've talked about that. They want advice that's trusted, non-conflicted. They want to deal with someone that understands people like them. They're concerned about cost, so they want low cost. They don't want to be upsold. They want a process that's uncomplicated. They want an accountability element to it. And there's one thing that seldom gets talked about in financial wellness, but I think is very important, which is portability. And the reason I think it's important is because today people have 10 to 15 jobs. So they're moving from one job to another. And when they do that, particularly in 2-earner households, there's a complicated set of issues when we think about, for example, benefits. But if you think about how wellness is delivered, we could take a continuum. I mean, it can be from, personalized advice today, which is very often I would say high net worth focused in terms of the model, the delivery model, really oriented around assets under management. What's the challenge? It's really not geared for a mass market. It's not geared for everyone. It's not geared for that two-earner household, again, that may be making a nice income, but doesn't have $500,000 of investable assets. Robo, we've talked about a bit. I think Robo needs that human element. I think ultimately people want to get at least a confirmation that they're doing the right thing and going in the right direction. And then a third way that wellness programs are done today, of course, is by offering people information. I think that's good and valuable. But again, for those that need help interpreting that information, engaging to use that, those are the challenges. As a matter of fact, I think engagement is a real challenge in general, and a particular challenge when we think about robo and information solutions. It's how do you get people to use it? So I would say portability, engagement, and human interaction are things that we could do better, and we think we're addressing.
Yeah, and I apologize for jumping in.
No, not at all.
Question about technology, because technology, we're currently talking through video conference, right? So how do you leverage the technology, but still because you can't have an advisor, if you need an advisor for example, every participant in a retirement plan, there could be 1,000 participants, there could be 10,000, 500,000 participants. You can't have an advisor be there for all 1,000 or all participants. So how do you leverage the technology but do it in a more personalized way?
Well, the way we leverage technology in our model is that we do bring individuals and advisors together. But the way we leverage it is really 4 areas. One is operationally. So we're consolidating information. We're getting information to an advisor on a very efficient basis and a standardized basis. The reporting back is also standardized. So there's an operational element to it and an efficiency element to it that makes it attractive, frankly, for an advisor under our approach to handle a much higher client load, much greater client load, than they would normally handle. The other thing we do through technology is a match. Again, it gets back to that issue, that fundamental question: does the advisor understand people like me? We have a very robust matching algorithm that brings people and advisors together to create a foundation, because it's all about trust, right? At the end of the day, it's trust. Do I have a feeling that individual has my interests paramount? Another aspect of it is accountability. It's not particularly complex technologically, but surprisingly, when we think about advisory relationships between the relationship of an advisor and an individual, you don't see a lot of information out there about references or what the experience would like, but yet you can go buy something on Amazon and there's tons of information about a given product and reviews. So we think that reviews are important and they promote accountability. Yeah. And then I would say the last way we use it is to get complementary information out to individuals about decisions or issues they're dealing with to help them, again, be more informed. Yeah, and to your point, Gary, I think people can go and do a broker check, right? But they don't know the bedside manner of that financial advisor. They don't know the experience. And I think you're right, kind of the Amazon approach or the review approach, the Yelp approach, to use another famous brand, really can help people kind of understand the interactions. I guess the last question here, Gary, is around how does this all plug into, how do financial wellness solutions like FitAdvisor and others plug into the retirement ecosystem? Because the retirement ecosystem is not a uncomplicated ecosystem. It's got record keepers, it's got asset managers, it's got advisors, consultants who do provide fiduciary services for those plans. It's got employers, it's got trust companies. So how does this plug into that world, which is very complex? We have, I think stepping back, when you think about wellness programs, and I know you give these issues a lot of attention in your efforts, what do they ultimately produce? What does the research suggest? So the research suggests there are a couple of very meaningful benefits. Number one is, generally speaking, if you've got an individual that's engaged in a wellness program, you'll see a higher deferral rate. There's quite a bit of research around that. So deferral rates are benefiting. And then, of course, secondarily, you will see, in the general sense, better asset allocation decisions. So those are two very important things when you think about financial results. We have partners we're working with in the retirement space who are motivated by the idea of helping people to make better utilization of the plan, and to help them deal with a lot of issues. So you say, well, a lot of issues like what? Well, one of the things that's coming at employers and at individuals now is the whole challenge around emergency savings, which of course was highlighted through this COVID-19 pandemic. And so you're getting to a situation when you think about a retirement plan, emergency savings, and other options in healthcare today, again, which people are thinking about more and more. You need help. You need somebody to guide people through that. So as we see it, I think that the real payoff is, and our partners see it as a payoff in terms of helping people and engaging with them. And if the wellness program can be a proactive program that engages the individual, deferral rates increase, and they feel like they're having a stronger, better relationship with the participant, with the consumer in the case of an IRA.
Yeah. Well, it's certainly, look, I think it's a ripe opportunity. There's certainly in my opinion, a deficit there in terms of getting people engaged. We know there's a financial literacy issue in this country and around the world, so it's not just here in the U.S. And it's going to take organizations like yours to step up, provide solutions, and help just the average person understand what they need to do and get them to a place of retirement. I think that's the best way to solve this quote-unquote retirement crisis. Gary Lineberry, we're going to leave it there. Always a pleasure chatting with you. Really appreciate you coming on, and we look forward to having you back again very soon.
It's been a pleasure. Thank you, Jeff. Take care.
Thanks, Gary. Great to see you. Thanks for sharing your perspective. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. On Tuesday, I sat down with Pluto TV's Will Gurman to discuss how audiences are embracing streaming. Let's take a look.
So Pluto TV is the leading free streaming TV service. We deliver hundreds of live and original channels and thousands of on-demand movies in partnership with major TV networks, movie studios, and publishers. Pluto was founded back in 2014, really with a mission to entertain the planet and resolving the paradox of choice, right? Consumers have so many different options and so many different ways they can consume media. And our founder Tom Ryan came up with the idea of really aggregating short form content to reproduce the linear format that is very familiar to you and I, but it was really based on three contrarian principles here. That linear would win out in a time when on-demand was really growing, that consumers would be open to advertising at a time when everything was moving towards subscription, and that the business should move towards free at a time when, again, everything was moving towards subscription. Really one of the true benefits of Pluto is it's so easy to use. You don't need a password, you don't need a credit card, you just drop in. And we work very closely with over 30 different distribution partners to make sure that Pluto is accessible everywhere, whether it's a mobile phone, a connected television device, web, you name it. Really, across any devices, Pluto is incredibly accessible and easy to find and easy to use.
Well, that's important if you want to have success as an organization and you want to reach as many people. Well, let's talk about consumption, because you mentioned the company was founded back in 2014, and there has been a shift, I would say, and you're the expert here, in how people consume information, how they consume entertainment, how they consume news, how they sit back and relax. What has that shift been like?
Yeah, well, really what we're seeing is just choices galore, right? You have so many opportunities and places in which you can gather your information and consume media, whether, again, it's on your phone, whether you're on a news site, whether you're on television. And really we see Pluto as complementary and not competitive in this streaming space. The average household will have their own subscriptions to different platforms, whether it's cable or SVOD platforms, but we see ourselves as a free alternative that packages well with users' media diet, whether they want news or entertainment and movies and television shows. And I think speaking to the broader picture of Pluto being part of the Viacom CBS ecosystem, as again I mentioned, what has been so incredible of Pluto being within the Viacom CBS ecosystem is having the global footprint of Viacom CBS combined with really the expertise in advertising and marketing and the deep library of content and distribution. But as part of that, being within the ultimate strategy of Viacom CBS that, as you're well aware, has had decades of strength in the cable world, as well as now emerging strength in the SVOD space with Paramount Plus. And we really see Pluto TV as complementary and part of that ecosystem where it can stand as a standalone business and offering for those who want to consume their media in the free space, but also we're really working very closely with our peers across both Paramount Plus as well as the linear networks to serve as a funnel into content and into those different segments of audiences, whether that's our Paramount Plus Picks channel on Pluto TV, where we're promoting some of the best content that's available on Paramount Plus, or other stunts we do throughout the year where we're working with our partners at the linear cable channels to really promote and stunt different channels. So there's really something for everyone, and so many different ways to consume, and we feel that we are just, as Pluto, part of that ecosystem of options. What you find is, again, I think the power of Pluto is this idea of curation, and I'll get to that in a bit, as well as, again, this idea of ease of access, right? You find yourself just dropping into shows or content that you might not have actively selected if you were spending minutes and minutes going through the guide, and suddenly you're in an episode of something that's familiar, an episode of Three's Company that you hadn't seen for years, and suddenly you find yourself watching for 3-4 hours, and you're deeply engrossed in the show. So to that extent, we have a very significant team of I think it's over 24 programmers and channel editors that are uniquely curating these channels for specific audiences. And really they're adding this human touch and this human element to these channels. While of course, like many companies, we dig deep into our data and use our analytics to support our programming, we really rely on our programmers and their expertise. For example, we have a former MMA fighter curating our fighting and wrestling channels. We have a stand-up comedian doing our comedy. We have a movie buff, programming our film channel. So we really lean in on, human curation.
And I also sat down with Aon's Beth Halberstadt to learn about the 2021 Defined Contribution Retirement Themes. Let's take a look.
Generally speaking, in the world of retirement, things move slowly, right? We're focused on the long term. But with this new legislation, the Secure Act, and with COVID, it's really created this environment for change. So as we're looking into 2021, obviously we have three months under our belt, right? A quarter done. There's a few key themes that we think are going to continue to drive meaningful change in DC plans. Post-COVID, right? We expect to see growth in investment outsourcing. So think OCIO solutions. Plan sponsors and committees are going to be even more focused and interested on shifting the work and the liability of selecting investment managers to their advisors. We saw this momentum after the financial crises and anticipate the same trending. There's been a lot of focus on ESG, or responsible investing, and there's a big appetite by investors to integrate their views into their retirement programs. But how to integrate those tenets of into a DC plan as a prudent fiduciary really is the question. And it's been quite a roller coaster. So for starters, the final rule was passed by the DOL at the end of last year, and it clearly states that fiduciaries can't simply screen and select an investment because it's good for the environment. And then just more recently, in the past month, the DOL just announced a new non-enforcement policy of that final rule. So tricky landscape for fiduciaries, more to come. Pooled employer plans, or PEPs, is the newest innovation in DC plans. Hottest topic this year, for sure. Multiple employer plans in one large plan or program isn't new. It's been around for a while, but with the passage of Secure, you can now pool unaffiliated employers into one plan, which we're now calling PEPs. PEPs allow a plan sponsor to outsource much of the work and decision-making to a third party. So think things like selecting a record keeper or trustee, picking the investment options, conducting a plan audit, and oversight of those vendors can now all be outsourced. So this really opens up the pooled plan platform and employer choices in a really significant way. And Aon really believes it's going to dramatically change the DC landscape over the next 10 years, whether it be for small plans or large plans alike. Litigation in Erisa is on a significant rise. Many of the lawsuits are focused on fees. So as we think about that, we believe managed accounts are going to get much greater scrutiny. The question here is that we need to really solve for is, are participants truly engaged enough in their managed accounts to create a customized portfolio, personalized, at a price point that's really going to drive better outcomes than they could get in the target date fund that's currently offered in their plan. So stay tuned there. And then in the latter half of 2021, we anticipate that retirement income solutions are going to get a tailwind as a result of the Secure Act and the new disclosure requirements. So the new rule requires that plan sponsors actually provide participants with a projected retirement income calculation based on their current account balance. So putting that front and center with the employee we think is going to generate greater demand for retirement income solutions and in plans going forward. So definitely a lot of great opportunities and momentums here to drive better plan design and a true evolution of the DC plan in a more meaningful way. And you think of those types of organizations that don't offer a retirement benefit plan today, most often it's going to be the small employer. And as we know, many small employers are just struggling to stay afloat, and they've got real near-term business stressors that they need to focus on. And retirement always feels like that, something you can focus on in the future, and it seems so far away. So unfortunately, I don't think it's going to drive as much as we had hoped that the result of the PEP launch would. But that being said, as of the end of February, we've got 52 organizations out there that have registered for a PEP. And those organizations, if they really ramp up their distribution and their focus on their outreach of employers that don't offer retirement plans today, a PEP solution's extremely compelling. Low cost, very little work for a small employer, outsourcing the risk to those who are expert, extremely compelling. So their success in reaching the underserved is really going to be a critical driver of adopting and launching of new plans. You know, the ability to offer a real turnkey solution and at high quality. So when we think about the benefits a PEP can bring, right, it's going to bring high quality investments at a low cost that typically is only available to an institutional, large plan sponsors, 100 million and greater, is now available to the small employer who's got no assets to start with. So, in the past, they've, you think of nonprofits, right? Nonprofit employees don't expect that there's a retirement plan available. PEPs are going to allow for that in a much more meaningful way. So we definitely think it's going to change the landscape in that regard in a much more positive way.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our newsletter, The Morning Pulse, and of course, our website. We're back again tomorrow for BRN Sunday. I'm going to be joined by members of the media, academia, financial services as we analyze all the news and information this week in retirement markets, technology, personal finance, so much more. You name it, we've got it. So until then, I'm Jeff Snyder. Stay safe, keep saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.